Welcome to Cold Brew Finance's U.S. End-of-Week Deep Dive, covering market moves in indexes, sectors, stocks, and global markets. The week ending Friday, February 6th, 2026, has seen significant activity. Kicking things off, I'm Max Profit. Key indexes were mixed this week. The S&P 500 index closed at 6,932.31, down 6.71. Despite the dip, it maintains a very strong positive trend. Meanwhile, the Dow 30 index surged to an all-time high of 50,115.68, climbing 1,223.20 with a continued upward trend in volatility. Market breadth indicates a differing path across indexes, with the S&P 500 seeing more advances than declines weekly, while the Nasdaq Composite Index recorded a drop, with more significant declines in its stocks. The Russell 2000 Index also saw advances, marking a positive trend. For total and daily returns, the Dow 30 Index led with a weekly total return of 2.5%. The S&P 400 Mid-Cap Index had an impressive 4.3% weekly return. Meanwhile, the Nasdaq's return was negative, reflecting its strong downward volatility. Looking at longer-term performance, the Nasdaq enjoys the highest 10-year annual rate of return at 18.1%. The S&P 500 Index follows at 13.9%. The Russell 2000 Index shows strong growth with an ARR of 10.5% for the same duration, reinforcing a robust trend.
Checking out best and worst performing equities, I'm Penny Stock. Liminatus Pharma, Enphase. Class A made significant strides with its stock closing at 1.84, a surge of 234.4%, marking a new all-time lower close. It's worth noting the strong positive trend. Similarly, Dark Iris Inc., Class A ordinary shares, had a closing price of 0.59, up 78.3%, experiencing a downward breakout after remaining flat for 3 days. In weekly performances, Liminatus Pharma, Enphase, Class A, saw an impressive one-week total return of 234.4%, while its MTD shares also matched this, reflecting an average daily growth. On the flip side, Dark Iris Inc., Class A, ordinary shares, faced a mixed negative trend despite its gains. Its one-week total return stood robust at 78.3%. Looking at longer returns, JBDI reported a one-year total return at 56.25%, while other stocks struggled with missing or negative 10-year performance. Notably, Enphase Holding registered a strong positive trend with a one-year total return of 159.6%, marking a new one-year higher close. In big-cap stocks, Enphase Energy closed at 49.80, up by 34.6%, indicating a strong positive trend. Meanwhile, DaVita experienced consecutive positive closes over 3 weeks, marking a strong upward trend with a closing price of 140.83, reflecting an increase of 28.8%. Examining daily returns, Teradyne stood out with an 8-week streak of rising prices, culminating in a new all-time high closing at 300.11, showcasing extreme volatility. Hershey also displayed a very strong positive trend with 2 weeks of continuous gains, hitting a one-year high with an 18.8% rise in value. Long-term analysis highlights Teradyne again, with its 10-year ARR reporting at 32.22%, demonstrating sustained growth. Meanwhile, Tapestry reflects a 33.95% 10-year total return, new highs, and a robust positive trajectory over the same time frame. Switching to the underperformers, Elong Power Holding fell dramatically by 92.1%, closing at 1.10, reflecting a very strong negative trend. Likewise, Phoenix Asia Holdings Limited Ordinary Shares hit a new higher close at 13.71, but ended down by 89.7%, indicating a reversal in trend. Turning to returns, Decent Holding slumped by 85.5% on a weekly basis. Notably, American Rebel posts a grim report, closing down for the 10th consecutive week, highlighting a prolonged downward trend and flat movement for the past 76 days, with an 80.5% decrease. Among the worst-performing U.S. stocks, Elong Power Holding experienced a hefty drop of 92.1%, with a close at 1.10, driven by a very strong negative trend. Similarly, Phoenix Asia Holdings Limited declined 89.7%, reaching an all-time lower close at 13.71. Decent Holding also saw a significant decrease, with its price down to 27 cents, marking a new all-time low close in a very strong negative trend. American Rebel fell 80.5% to 1.8, continuously closing lower for the last 10 weeks, further indicating a severe negative trend. Lastly, Carbon Revolution's price dropped 74.7% to 40 cents, closing in a negative trend of consecutive weeks down. This week's standings show big cap stocks facing turbulence. Molina Healthcare recorded a significant decline of 26.6%, closing 2 weeks in a row downwards. Likewise, Gartner faced a 25.4% drop, closing at a one-year low. Another big faller was PayPal, which remains on a 6-week negative streak, its volatility intensifying. IQVIA and FactSet Research Systems both closed lower, facing strong volatility and negative trends. Let's take a look at total and daily returns among big cap stocks. Molina Healthcare led significant declines, with a 1-week total return of minus 26.65%. Gartner and PayPal followed closely, reflecting substantial weekly downturns. Furthermore, IQVIA and FactSet exhibited negative trends and notable daily losses, rounding out a challenging week for these stocks. Examining total and annual returns, we find Molina Healthcare down with a 1-year total return of minus 53.78%. Gartner faces an even steeper descent with a 1-year drop of 70.75%. PayPal, meanwhile, exhibits declining returns, reflective of its pronounced downward trend. Similarly, IQVIA and FactSet echo these trends, both posting unfavorably for the year.
And now on to U.S. sector performance. The consumer defensive sector closed at 986.4, up 56.14, marking a 6% increase. This week shows a new all-time high, a strong positive trend, and 5 consecutive weekly gains. Upward volatility remains robust as momentum builds. The energy sector demonstrated remarkable strength with 127 advances to 20 declines in a day. 7 consecutive weeks of upward close are noteworthy. Meanwhile, basic materials sector saw 150 advances over the week, portraying a consistent upward pattern amidst strong positive sentiment. Examining the returns, the consumer defensive sector posted a 6% total return, translating to an average daily rise of 1.18% over the past week. The energy sector also impressed with a 4.3% gain for the week as momentum continues to accelerate across U.S. sectors. Highlighting long-term strength, the industrial sector delivered a 25.7% annual return over the past year. Over a decade, it boasted a robust ARR of 12.89%. The continued uptrend reflects sector resilience and optimistic momentum moving forward.
In the U.S. consumer defensive sector, Hershey achieved a new yearly higher close at 231.53, increasing by 36.78. This marks 2 consecutive weeks of gains and signals a very strong positive trend. Meanwhile, Walmart hit an all-time high close, with a price of 131.18, gaining 10.1% this week, indicating robust upward volatility. Within a similar time frame, PepsiCo posted a total return of 10.9% and an average daily return of 2.1%. Target showed a 9.5% total weekly return. Less impressively, Lamb Weston maintained a mixed trend despite gaining 4.19, closing up for the fourth consecutive week. Examining longer-term figures, Walmart stood out with considerable 10-year annual return at nearly 193.6%. Despite short-term gains, Target experienced a negative 1-year return, while Lamb Weston's longer-term picture also reflects downside.
This week, several sectors saw notable declines. The consumer cyclical sector fell by 4.5%, reaching a closing price of $1,871.50, marking the second consecutive week of decline. It's facing mixed negative trends and strong downward volatility. Meanwhile, the technology sector also closed down by 1.3%, continuing a 4-week downward trend. In analyzing market breadth, the consumer cyclical sector recorded more weekly advances than declines. Conversely, the communications services sector showed more declines than advances, despite registering a new all-time high recently. Interestingly, financial services recorded a substantial number of weekly advances, indicating robust performance. On total and daily returns, the consumer cyclical sector showed a negative weekly return of 4.57%. The technology sector also recorded a negative return, but at a lower rate. In contrast, the utilities sector demonstrated resilience with a modest weekly gain, owing to its upward price breakout. Examining the annual returns, the consumer cyclical sector has a 10-year ARER of 12.88%. In contrast, the technology sector boasts a remarkable 23.83% over the same time frame, highlighting its long-term strength. Meanwhile, utilities continues with a stable, positive trend.
In the consumer cyclical sector, major names posted notable declines. Amazon witnessed a steep drop, closing at $210.32, down 28.98. This points to a very strong negative trend and heightened downward volatility. eBay and Tesla also saw declines, with eBay dropping 4.67 to close at 86.55 amidst a mixed negative trend. Let's look at the returns. Amazon posts a 12.1% drop for the week, marking its current trend. Meanwhile, eBay and Tesla ended the week solidly lower by 5.1% and 4.4% respectively, reflecting mixed negative trends over the period. Domino's also struggled, down 3.7%. Focusing on long-term gains, Amazon has a remarkable 10-year total return of 737.59%, translating to a 23.67% annual rate. Tesla outshines with a significant 10-year return of 3,692.53%, showcasing a hefty ARR of 43.82%. Consistent gains are evident in the auto and e-commerce segments as well.
Thanks for watching. I'm Max Profit, along with my AI co-host, Penny Stock. Please like, subscribe, comment, share. Cold Brew Finance is an experimental project with market reports written, narrated, and delivered totally by AI, with market data kindly provided by financialmodelingprep.com. Always seek professional financial advice before making any investment decisions. Check into the channel daily for coverage of stocks, crypto, currency, and commodities. Thanks for watching.